Well, Matt, I know we just closed on a new property here just at the end of the year. Would you share a little
Yeah.
bit about this one?
Yeah, we're really excited about this one, Ben. I was out touring the asset myself last week, 136 sites in Northeast Ohio, acquired off market from a mom and pop ownership group that actually built this community. And we're really excited about the return profiles here. Rents are far below market, so big upside there. We have the ability to sub-meter back utilities and actually grow occupancy by bringing in new homes. So once all is said and done, this is going to be a really good performer for us. And we just got this deal done. So great way to cap off a wonderful year here at Crystal View.
Yeah, that's right. We've got, what is it, 25 assets now in Fund 4. Cash flows coming in. Could you just talk generally about where Fund 4 is at today?
Yeah, I mean, Fund 4 is, in my opinion, a very strong spot. That's why I continue to invest personally. We're hitting very, very healthy cash on cash returns. The pipeline for new acquisition is quite robust. We've got about 30 million in new acquisitions slated to close here in Q1, so very excited about that. We continue to execute across the portfolio. A lot of these assets are still, believe it or not, in their infancy stages of the value creation plan. So as we continue to execute on that business plan, as our team does, we're going to see those cash on cash returns continue to rise, which allows us to really deliver for our investors.
Yeah, wonderful. Well, Matt, that brings to mind we're heading into a new year, right? 2026 is almost here. What do you see coming down the pike in 26? You mentioned acquisitions, but what does 26 mean for Fund 4?
Yeah, I mean, I think 26 means more of what we've already done, right? And just enhancing that and making it better. I think our strategy is spot on. The idea around putting our shoulder into this whole affordable housing crisis and really being the low cost leader in terms of providing this affordable housing has been huge for us. Obviously, that's a thesis that's working well, that has worked well and will work well into the future. And I don't think that's a secret for any of our investors. So we're going to do more of that, just being disciplined in terms of our approach, finding great off market opportunities, not steering too far away from our core competencies, just executing better, leaning into AI. How could we become more efficient? How could we actually have margin expansion, which delivers even higher cash flows for our investors? So all of those things are we're going to be heavily focused on in 2026. I think you're going to see actual transaction volume increase from what we achieved in 25. I think you're going to see our home sales program, which is just now starting to take off, be even more robust, where we're hitting even higher occupancy growth across our communities. And as you know, our underwriting assumptions are very, very conservative. We're really not pricing in any occupancy growth, or it's very modest. So if we're able to execute here, I think we're going to continue to beat our initial underwriting projections, and I'm excited about it.